Wall Street traders at terminals, empty storefronts, flashing headlines, GDP growth slows, job market softness, resumes ahead. Is the US economy heading for a soft landing or something for oats? New economic data released this week has reigniting resumes fears. GDP growth is slowing, job creation is cooling, and consumer confidence is slipping. All eyes are now on the Federal Reserve as markets wait for the next move on interest rates. Charts slowing GDP over time, economists on the cable news, shoppers in malls and gas stations. According to the latest number, US GDP grew just 1.1% in Q2, well below earlier forecast. That's down sharply from the 2.6% growth seen at the start of the year. Meanwhile, job reports show only 108,000 new job added last month, the weakest number in over a year, and wage growth has begun to flatten out even as living costs remain high. Economists say this is a classic sign of a cooling economy. But the big question now is how far will it cool? Jerome Powell speaking at a podium, Federal Reserve building interest rate cuts graphs. At the center of it all is the Federal Reserve and its ongoing fight against inflation. After years of aggressive rate hikes, the Fed is now walking a tightrope. Raise rates again and rise risk tipping the economy into resilience, pose to soon and risk a resurgence of inflation. Fed Chair Jerome Powell has remained cautious, saying the Fed is watching the data meeting by meeting. The next decision is expected in just 2 weeks and Wall Street is holding its breath. Stock market tickers, CNBC clips, traders reacting to market drops. Markets have already reacted. The Dow fell over 700 points this week and Nasdaq dropped nearly 2% and the bond yields have inverted against a traditional region signal. Investors are looking for clarity, but the data is sending mixed messages. Some sectors like housing and energy are showing signs of stabilization, while others like tech and retail are flashing red. Families shopping at grocery stores, small business closing, students looking at job boards. On Main Street, the slowdown is being felt in everyday life. Consumers are cutting back on spending, credit card debt has reached record highs, and small businesses are struggling to secure loans as interest rates hover above 5%. Many Americans say it feels like a resilience even if economists won't officially call it one. Election campaign trail, politicians debating economic policy, stimulus proposals being announced. With the 2025 election seasons heating up, the economic is quickly becoming a top political issue. Republicans blame Biden's spending for overheating the economy. Democrats say the Fed needs to hold steady and avoid triggering mass layoffs. Some lawmakers are now floating new stimulus proposals, especially for debt, student debt relief and rent subsidies, but any major action will face a fight to in rates. Federal Reserve still, Wall Street skyline, American flag waving over city skyline. So what does that leave us? The US economy is not crashing yet, but it is slowing. The margin for error is shrinking. The Federal Reserve's next move could determine whether America glides into a soft landing or shrinks into something far harder. Economic slowdown, what comes next? GDP growth 1.1% Q2. Next Fed meeting, August 21, 2025. Residence odds, Wall Street consequences, 5.552%.